All right. So, once again, chapter 13 is going to be looking at adjustments and year end procedures. So, if you're following along, we're looking at adjustments 18, problem in the book. Okay, and we're going to be taking a look at what we do when we reach the end of our given accounting period. So, if you guys remember, the accounting period, or in this case, is determined based on when we complete the accounting cycle. So, what are the steps that are included in the accounting cycle? It's going to be pretty much the steps that you need to take to properly close out the temporary accounts, and it also helps you wrap up that accounting period. So once again, like when we talk about the accounting cycle, right? We talk about how you're scheduled, or you complete the accounting cycle. The accounting cycle could be, for example, every week, every month, every day. It could be every quarter, so every 3 months, or it could be at the end of every year. Now, what usually are those transactions would be adjustments. So, for example, right? Maybe we used office supplies, so therefore we need to make an adjustment to reflect that we don't have any more office supplies. Make sure that we go over our inventories to be sure that we can just to make sure that our inventory is adjusted. Like, is this the correct amount of inventory that we have left on hand? So someone goes down to the basement, takes a physical count, right? Other than that, we also have what's called depreciation. So as we make purchases of fixed assets, right, we learned that they're not going to hold their value if you use it. So a good example is if you bought a printer and you turned it on and you used it, you cannot sell it back for the full price that you paid for it. You would have to value it at the amount that you used it for. So think about it like that. And then other things would be in case you have prepaid rent or any prepaid expenses. So a good example would be if you bought insurance. And usually when you buy insurance, it's usually could be anywhere from 3 to 6 or even a full year's worth of insurance. So how you would adjust that is saying, well, this month I finally used this insurance, so I have to make my adjustments there. So right here at the bottom of this page gives you a few examples of what adjustments can be and what they are. All right, and how we use our adjustments is pretty simple. We like to use general journals. So we've seen a very small glimpse of what the general journal does and what it usually looks like. All right. So if you guys remember from chapter, for chapter 8, I believe I got to expose to you what a general journal does, and I believe in chapter 12 as well. You go to company on the menu bar, and you're gonna see it says right here, make general journal entry, and this is what pops up. Usually you get a window and you say okay. So there are multiple uses of a general journal. Primarily, it's used for 3 things. If you accidentally make a mistake and you need to recategorize your accounts, which I'll take a look at today. So if you made a mistake and you need to fix it, you'd be able to do it by making a general journal here. Other things that we could use it for is for adjustments, right? Where we talked about, wrapping up the end of the accounting cycle. This is where the accounting 101 is very, very important that you need to know, because And then lastly, we use this to make our opening balances. Okay. Now, so again, that's chapter 12. Okay. So once again, when you make an adjustment, okay, so this is where accounting 101 needs to come into play, because this is where it's important that you know how a transaction flows from one account to another. So this is where you need to focus on understanding how debits and credits work. So usually I would say this section of QuickBooks is more geared towards accounting. You need to have the accounting background to fully understand why a debit needs to flow in this direction and why a credit needs to flow in another direction. Okay, so again, this is more for advanced levels of QuickBook users, is understanding how to use the general journal to either correct a mistake in your transaction or to make adjustments. So once again, when we talk about journals, right, we talk about how the transaction can flow and how QuickBooks, right, when we enter in a form, right, every time we enter a sales receipt, right, or a bill, in behind the scenes, it does the work for you. So therefore, you never see the general journal transaction. However, once again, when you do end up doing your adjustments or your beginning balances, this is where you need to know exactly what you're doing as an accountant. So this is, once again, one of the areas that you do need the accounting experience or the accounting background to truly understand how to manipulate QuickBooks to make it work for you. Okay, if you don't know how to what is it? The best way to think about it is, if you don't know how to enter in a transaction properly in QuickBooks, your best bet is to use your general journal. So once again, this is part of the sections where you do need some exposure to accounting to understand how debits and credits work for you to properly be able to journalize. Okay? So that's that. Okay? Now here, they actually recommend you to do this in order for you to keep a good track of all your general journals. They do recommend you that you should create a bank account, right, called journal entries. So as you can see right here, it is right here, journal entries, right? If I double click on it, it gives me a general journal register. Now, once again, we're going to take a look at a few examples of how you could use the general journal, right, to either complete adjustments or to, in case you made a mistake or you forgot to rearrange a few things, then this is where you can go ahead and use it. So once again, it looks just like a regular entry, right? You can double click and modify them at any given time, and it would just look like this. Okay? It will pop up the general journal that you can utilize in what we just looked earlier on the company menu. Right? So it's only a couple ways that you could do it, through the chart of accounts or through the company file, make a general journal entry, right? It does not appear on the home page, so you will not ever find it here. If you want it set on your icon bar, that's going to be something that you have to customize, but it's not going to be automatically set for you. You have to customize it for you to be able to see it. So in this case, there's only two ways to be able to do this, right? You either go to the company file and make a general journal entry, or you go to the chart of accounts and be able to locate your general entries bank account and be able to do it there. Now, if you don't have a general journals bank account, what happens is that, notice this, okay? let's go take a look at my chart of accounts one more time. If I scroll to the very, 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 very bottom of my journal, I have down below here are going to be what's called non-posting transactions. That's where it will be if you do not create a general journal or a journal entries bank account. It will be right here down below. Okay. Now, of course, you would have to set up the A account. It will automatically pick it up if you don't associate an account with it. But you definitely want to make sure that you keep track of it some way or somehow. So once again, purchase orders, right? We call that a non-posting transaction because it doesn't really, there's no transaction to really record, right? When we make a purchase order, all we're doing is we're requesting for items. No transaction was made. There was an estimated amount. However, there was no money that was being transferred. You haven't received your inventory items, nor did you receive a bill. So in this case, it's going to be considered a non-posting transaction, and that's where a general journal will be if you do not create a general journal entries bank account. But once again, every time, in case you even make a mistake doing an adjustment, then therefore you can always correct it if you set up the proper account. So it's always recommended that you do have that bank account separate for just the journal entries itself. So you can easily locate it, and it makes it easier for you to create it and fix your mistakes in case you accidentally made a typo or something like that. Okay? So that's that there. So once again, let's go ahead and go to the company and click on make those general journal entries. Okay, so the first one that we're going to do is going to be an example where we actually use the general journal to go ahead and basically we're going to what's called recategorize the account, or in this case, we're making an adjustment. Okay. But in this case, right, let's take a look at this example. So here we made a mistake because we decided to use rent expense, right? We dumped a whole amount in rent expense, but part of that rent expense is actually part of utilities. So how we're going to fix it is going to look like this. We're going to make our general journal entry, right? And we're going to fix the issue by recategorizing them in the correct account that it's supposed to be. So first things first is usually adjustments can happen towards the end of the accounting cycle. But once again, if you're doing this on as part of an adjustment that you normally would do during the period, such as maybe you are trying to adjust your inventory, or whether you're trying to open up your account balances, then the time's going to be relative. But most cases, your journal entries or your adjustments would typically happen towards the end of the given period. Okay, so in this case, Academy Photography does it at the end of the month. Okay, so here I'm going to go ahead and locate this because once again, this pulls us into the future or present time. So we can retroactively actively place our transactions in. That's completely fine as long as we, click on the correct date. So here we are, January 31st, 2019. Okay. And once again, how you do your general journal entries is up to you on labeling them. So in this case, it's right now, it is 2000. I think that's okay. 2000. It says 2018-4. So in this case, I think our book wants us to change it to 2019-1. So 2019-1. You could do is it GJ for general journal -1. However way you want to keep track of your transactions, or especially your adjustments or any journal in general, you can label it whatever, and it's going to collate it. And the next time you open up another general journal entry, it will automatically continue in its series. So the very first thing that we're going to do is, because you need a place to record it, right? In this case, the very first thing that they tell you to do is place the journal entries bank account, right? So then when we actually, once again, when you're trying to locate where this general journal entry is, at least we'd be able to associate it right there, okay? By saying this is going to affect my journal entries bank account, okay? But once again, if you don't have that, it's not necessary, but they do recommend it. Then what's going to happen is this is going to fall under the non-posting transaction, and you'll be able to locate it there. But for most cases, like I said, it's encouraged to create that bank account, so then you're able to view the transaction easily. Okay, and we're going to say this is going to be recategorizing expenses. So let's go ahead and write recategorize expenses. Okay, underneath the memo. Okay. So here's a few rules when you are going to be looking at your debits and credits, okay? It does not matter what order you write your debits and credits in. So at least for this one, QuickBooks is subjective. It doesn't matter how you put it in there, as long as one rule follows through, which is that your total debits match your total credits. Now in accounting, what we learn is if you are doing manual journal entries, you are required to at least follow the rule where your debits go first and then your credits go afterwards, okay? But once again, here in QuickBooks, it doesn't matter. And how we organize or how we write our transaction doesn't matter either, because in this case, we're just typing a list of all of our debits and credit accounts or accounts, and we're just going to label them. Is this a debit or is this a credit? Okay, so our very first one that we're trying to take a look at here is that we are trying to debit into our utilities, because right, in this case, I made a mistake, right? I entered in the full amount into my rent expense, right? But my rent expense, right, included a portion of that money included my utilities expense. So here I am recategorizing it by labeling that I and transferring a small section from my rent expense to cover my utilities. So again, it really has to come down to how do you understand a business transaction, especially when you're trying to fix this mistake or make this adjustment. So in this case, right, I understand that I put too much money into my rent expense. So now I need to recategorize it or enter in that a section of the rent expense money actually belongs to my utilities. So there you go. I have utilities there, and I'm going to type in my rent expense here. Okay. So once again, let me take a look at how much of the rent expense actually belongs to the actual, so $25.62. So $25. So here, I'm going to show you this one right here, because what if, let's say, I accidentally fat fingered $28.62 in my debits, and then I put in here in my credits $25.62. Now, once I do that and I move away, it's now created a line item, because you cannot enter in a general journal transaction if the criteria of my debits and my credits do not match on both sides. So here, it's done the calculation for me saying, hey, you have $3 in balance in your general journal. So here, this is a preventative measure that QuickBooks decided to do, right? Because when we learn in accounting, your debits must match your total credits in order for an actual transaction to occur. So in this case, it will prevent you. And if you press enter now, it's still going to say, hey, you still have $3 missing on one side, and it will not let you go through. So this one will prevent you from entering in this transaction because it tells you that you have an imbalance. So we have $28 in my debit side for my utilities, and then here we have $25.62 for my rent expense. So once again, it's going to be smart, and it's going to tell you otherwise. Okay, so in this case, I would have to fix it. So this is what, $25.62. Okay, if I fix it, then now it's telling me, okay, now I have an extra $3 here. No, you don't, so you can clear that out. Okay, same thing here, you can clear that out. And it doesn't matter because since I'm not associated in an account and it's zero, this is completely fine. It will let you go through. I was just showing you the example that in case you do fat finger something, QuickBooks will correct you and let you know, hey, your general journal accounts are uneven. This is how we're going to fix it by giving you the difference, and you need to assign a specific account for you to be successful with your journal. Okay. And once again, you can use standard keyboarding, right, to go ahead and do this. So I'm going to highlight this, and I'm going to go ahead and do Control. And what I'm going to do is I'm going to copy this information down in every single memo. So in this case, I'm just making sure that I'm letting my journal entry go through, because once again, I'm dealing with a utilities expense account, and I'm dealing with a rent expense account. So you definitely want to make sure that you make a note on here. All right. And once again, once everything looks good, I'm going to go ahead and click Save and Close. All right. Once you get that beep of approval, the only way to be able to look at it is to go through your checking account. Well, actually, there's two ways that you can do it, right? You can go through your chart of accounts and click on your journal entries. Or what you could do is you could go up to the top under banking, okay? And then you could click on Use Register. And, okay, so in this case, I was already in there, so let's do it again. So go to banking, okay? Use Register, and it's going to give you this window. If you guys remember from the bank reconciliation, if you drop down this, you will find that journal entries is one of the options that you can look at. All right, so here it is, my general journal entry, right? 2019-1 appears right here. And once again, it's not going to have a balance because this is it's considered a non-posting transaction, right? It doesn't affect your bank account because whatever you're doing, right? It's basically essentially you have even distribution of your debits and credits going from one place to another. So in this case, it will not ever affect, you will never have a bank balance in your general journal account. It will always exist as zero. Okay, always. So once again, in case you made a mistake, maybe in the book, it was actually really $28.62, then you can go ahead and double click on here, and you'd be able to modify it and say, hey, it's actually $28.62. I fat fingered the wrong number. So in this case, you're able to correct your adjusting entries at any given time as well. Okay. So that's how you create a general journal. And once again, It's definitely meant for making your end of the period adjustment. So once again, when you do your depreciation, you want to update your supplies, or you want to find some kind of measures to go ahead and make your adjustments. That's what you do. You would have to use the general journal. And once again, this was something that I skipped over in chapter 12 when they said you need to enter in your year-to-date information, or when you're setting up your bank account or setting up any account in QuickBooks, it would generally be easier to use the general journal. Okay, so that is that. Right, so any questions in regards to creating a general journal? Okay, no questions?
No questions.
Okay, so let's observe this real quick. General journals only affect accounts. Okay, so notice this. It says account at the top. You are unable to add in any items to a general journal, because as we learned in accounting, we only deal with accounts. We don't deal with anything other than that. So that's one thing that you need to know. The difference when you're using your general journal is that it's strictly only for accounts only. So anything that's on your chart of accounts will be whatever you can post in the journal. Now, what if I need to adjust for items? Then we have what's called a $0 check. Okay. So in this case, right, we're going to go ahead and use a check, just regular, right? You're going to write a check, a regular check. But this time, we're going to make adjustments to where it's going to be placed, and et cetera, right? So in this case, instead of my checking account, I'm going to create it under my journal entries. You're going to get this message, and you're going to click OK. So this is why it is also important that you do have it here, because when you do use your bank account, and like I said, they recommend you to use to associate your journal entries as a bank account. So if you do need to make adjustments for your items, unfortunately, you're only limited to the bank account here. So in case you do need to make your adjustment there, you'd be able to do it through the journal entries right here. The date is going to be the same. It's the 31st. But however, if you guys remember, since you have to keep track of your journal entries, you also have to make your $0 checks also reflecting the general journal series as well. So if you entered your first one as 2019-1 and you're doing a $0 check, then you're going to have to readjust it this way. Okay? So in this case, when we're looking at making adjustments for a specific item, so what this does is that in case you you sell a product to the wrong person, or you wrote the check for the wrong person, or for example, in this case, we actually assigned a different item, or we sold a different product when it's supposed to be something else. So in this case, right, we're going to go ahead and put Wong and Son, because that's the vendor that this transaction was associated with. W-O-N, there you go, Wong and Son. Okay. And what happened here is that it says that, right, this is expense. we need to go to items. So here, this is what the mistake was, that we didn't charge them for their proper item. Instead, we charged them for a different item. Okay, so it says here, in order to go ahead and fix this charge, is that we're going to place the photographer instead of one of the retouching packages, right? So in this case, we're going to correct it by entering in what the service was actually supposed to be. So in this case, we associated Wong & Son as a retouching package. But in this case, that's not what they're for. This is an independent contractor that we associate with in order for us to have photographers on our platform, or in this case, they're videographers. So in this case, we made a mistake. So how we're going to correct it is that we're going to adjust it by looking at the items, right? You have to be in the items tab, not the expenses tab, right? Expenses tab, you're able to do it because it deals with your accounts. We can already do that doing the general journal. But in this case, we're looking at items specifically, which we know to be the things that we sell, right? So here we must click items. In this case, we are looking at photographers, right? That's what we're oh, I hit photo paper. Okay. I want photographer. Okay, so once again, here I'm supposed to indicate that I made a mistake because I charged for retouching instead of an actual photographer. So here, I'm going to have to make adjustments too, because my retouching, right, if I go ahead and type in retouching, notice this, we have an imbalance. Okay, you're going to click OK. You're going to have an imbalance in quantity. So here, you're marking that this person owes you this much money, or in this case, this is a vendor. I'm writing a check to them, right? But the answer here is that because we made the mistake in the first place, and we charged this vendor because we charged them for retouching. So how you're going to fix it is you're going to see which account or which item did you make a mistake on. In this case, we made the mistake on the retouching. So I'm going to actually indicate that my amount for my photographer is for $95, and that my, okay, you click OK, and that my retouching, right, since I'm no longer having that service, because that's not what Wong & Son does. They are just strictly photographers. The retouching is on our side. So here, I'm going to make this one negative, so then when we reflect it in our books, okay, you're going to get this saying this, and I'm going to click OK. And now your end goal is that I am recategorizing my items because I made a mistake. I charged this vendor for retouching instead of a photographer. So here, this says here is how I am fixing it and how I am recategorizing it. So once again, the note here is going to be to recategorize your items, or in this case, to what do you call it? To readjust or to correctly to correct this entry. So in this case, I'm going to say recategorize items. Okay. And once again, let's take a look at our book to see which class that I could have possibly located this in. So here it doesn't tell me which class, so I'm assuming that my class is correct, that for whatever Wong & Son was for. That means if I assign them a class, right, it's already corrected, okay? So once again, you can use that for that reason too, is you could correct those entries, as well as making sure that you compute the correct entry. So in this case, I can use it in case I forgot to categorize a transaction. But once again, you can always edit that information pretty easily by just going to the form and just adding in the class. So this one is not really relevant. But once you get here, right, the goal here is, the reason why it's called a $0 check is because at the end of this check, because we're just transferring what we sold over, right, our end goal is that it should equal 0. Hence the word $0 check. And we click Save and Close, and we get that beep of approval. So once again, in order to locate that, I would have to go ahead and find my journal entries, okay? And I'd be able to find it right here. So once again, under your register, you'd be able to pull up your check and be able to modify it, okay? Now, just remember 2 rules. In your general journal, only accounts, nothing else. Your $0 check is for items, okay? You can do it for accounts as well, but the main goal of you making your adjustments for items only is to use a simple write a checks, okay? And once again, you have everything listed above here. So now I end up charging my Wong, or writing a check to my Wong and Son for the video, for the photographers, instead of having them charge for the retouching. Okay? Any questions? So once again, this has to do with a lot of the time, in case you do make a mistake in QuickBooks, this is pretty much how you can manage and clean it up, or edit the information to change, like this, for example, right? If I accidentally charged the wrong item to somebody, I can fix it by doing these 2 procedures. Right? Any questions?
Yeah, when you say write a check, it means that you just write it up in the computer, or is using like a regular check, like you already used the number.
No,
So
okay.
you cannot use the check.
So in this case, you're writing like an invisible check.
Oh, okay.
Yeah, there's no physical check that you're writing, because in this case, my account number, or my the number that I associated was the 2019-2. Okay, so in this case, you're not writing a check at all. This check ceased to exist. What you're just doing is, in QuickBooks, since you can't modify it using the general journal, they do recommend you that the only way to fix your items is by writing a $0 check, which is, in a sense, you're writing a digital check and you're recording it, but you're not writing a physical check, or you're not going to print this check at all.
Okay.
Okay. All right, so that's the journal entries there. Any other questions? Okay. So here we have editing, voiding, and deleting transactions. So once again, when we talk about editing a transaction, you can edit anything in QuickBooks at any given time. Now, there are some rules and regulations, especially depending on what position you are in the company, because sometimes if you're the actual admin of the QuickBooks, or you're the actual accountant, then you're free to be able to edit your information at any given time. Now, if you are a user, right, for example, if you guys remember in chapter 7, we created a user. We created an account, an account for the HR, the sales representative, right? You can restrict them to allow them to have whether they can edit the information or not. Now, once again, as the admin, you definitely want to make sure, you can allow those positions to have access to those sections and allow them to edit the transaction, because once again, if they have to come up to you to ask for permission, you have to do it on your end to fix the transaction for them. Okay? So depending on how big your company is, if you're a small company, then yes, that's probably more feasible. But if you're a more major corporation, yeah, you can imagine how long is it going to be for someone to make a mistake and to call the accountant to come and fix their problems. It's going to take forever. Okay. However, like I've mentioned before, you can edit a transaction at any given time. Okay, and we've taken a look at this before, right? I believe I showed you that every form that you do enter in, you can just simply edit them at any given time, because here there's no rules or regulations on when you can edit your transactions. But you should be very careful as well, right? Not to delete or void any transactions, just because, once again, if you can edit them, then you can, avoid making those mistakes in the first place, right? Because the crucial idea is you don't want to void anything, and you definitely don't want to delete anything. Because once again, if you don't keep a really good track record of any of your transactions, right, and you start deleting a lot of information, what you're essentially doing is you're also missing the accounting behind the scenes. Because especially when you're dealing with transactions that are very sensible, like if I delete a transaction that involved my bank account, then if I delete it or void that transaction, what happens is it either puts the money back, or sometimes it doesn't fix the problem. It actually creates another problem, because then you're going to have an imbalance in this, an imbalance in that, and so on and so forth. So you are better off editing the transaction than it is to void and delete the transaction. Okay? And once again, many examples could be like, what if what if the customer decides to call me and say, hey, I'd like to enter in an addition. I want to order additional photo paper or additional cameras or things like that. Then you have the choice. You can, they should, you should, excuse me, not they. You should fulfill the customer's order. However, best rule of thumb is, in case that does happen, right? Let's say in case, right? We'll take a look at this. Miss Maria Cruz decides to say, hey, I want an additional photo session. You should just send Maria Cruz a brand new invoice for whatever she wants. That's usually the rule of thumb, is that you should not edit your already existing invoice and send them a new one. Okay? Because essentially, like we've mentioned before, right? In this case, like I said, you're better off editing the information, but especially when you're dealing with a transaction where the customer decides to order more, or for example, right, let's say I call up my vendor and say, hey, can you tack on extra stuff? You're better off, writing a new transaction instead of editing a previous transaction and then issuing a updated invoice, okay? However, of course, I'm going to go ahead and show you that you can do it, like I've mentioned before, right? I'm going to go ahead and click on my create invoices, and what they do tell you is that you're able to pull up the previous one. The previous one should be the Maria Cruz. So let's see if it is. Maria Cruz branch opening. Yes, it was. So now we could go ahead and take a look at what she actually wanted. So in this case, the customer decides to call us up and say, hey, I'd like to actually edit my invoice and let you know that I want to have an additional outdoor photo session, right? And I want 3 hours worth of it. So in this case, so right here, it says that we only entered in a premium photo package. Maybe this was something that you made a mistake for. Maybe you forgot to put this in their invoice. So once again, and you decided to send it to them and they said, hey, I'm missing this information in my invoice. Okay, so once again, if you do fail to do that, right, most cases then you do have to edit and you do have to send a new invoice out. But for example, right, there's many reasons why a customer may come to you and you have to edit their invoice, okay? So in this case, I may have forgotten, or another occasion would be they want to add this onto their order. So I'm going to go ahead and indicate that they have an outdoor photo session. Okay. So once again, you can edit the information at any given time, right? So here, let's say I already sent this invoice out. Okay. If I did, and now the customer is complaining to me, or they say, oh, by the way, you didn't charge me for this, then you could be like, okay. So what you're going to do is you're going to do outdoor photo session, right? And say this is 3 of them, right? Because that's what Maria Cruz wants, okay? And then you're going to say thank you for your thank you for your business, and now you're going to say 3 outdoor photo sessions and 3 premium free photo packages. So here I've already indicated this. Now what you should do too is that now that you modify it, you should actually indicate it here that the invoice has now been revised. So you could do R for revised. You could do M for modify. So in this case, I'm going to do R. So I can indicate that my original invoice, which I sent out for the 2019 106, was just only the premium standard photo package. Now that I've modified this invoice and I have to send it over again, then I'm going to make sure that by keeping a good track of it, that it's now going to exist as a modified version. Okay, and I'm going to go ahead and click save and close. Now it's going to give you saying, hey, you have made adjustments to the transaction. Would you still like to record it? And you're going to click yes. So save the changes, and now you have to reissue Maria Cruz the updated invoice number, because now it is including the sales, okay, or the including the photo session. So once again, Maria Cruz is C, all transactions. So because we didn't write her a new one, right, it's going to show up as 106R because we modify it. We didn't issue the new one, we just modified it. So there it is. Okay, and let's say you want to modify it once again, then you just continue adding more things on here. Okay, so once again, QuickBooks makes it really easy to edit all your information, right? I can tack on anything there. I could, let's say I received a bill, but I made a typo in it. I can make adjustments accordingly. Come on, let's exit this. So once again, if I do need to record a bill, or I go to this, right? And let's say I accidentally entered in the wrong billing information, then you can go ahead and modify it at any given time. So I'm going to go ahead and pick on someone who has an account balance. Nobody has an account balance except for this person here. We have one for Boswell Consulting. So let's take a look at Boswell Consulting. Oops. Okay, so I have to go to the transactions here. Okay, all transactions there. I received a bill. I'm going to double click on it, so I still owe them money. So again, you can edit the information at any given time. So maybe I forgot the billing number, right? I can add it right here. Okay, I can change the date if I like. Maybe I tacked in an extra service. Okay, whatever a piece of information that you feel is pertinent, you can change the amount at any given time. Maybe I forgot to assign it to a customer, right? Here, it says that this was for the San Jose location. So from here, maybe I need to change it to Walnut Creek. You can change any of the information, edit as you go at any given time. So once again, that's what QuickBooks allows you to do. And you're better off editing the information than avoid it and then have to enter it again because you will mess up the rest of the accounting. Okay, so any questions on editing any information in general? Okay, you can edit any form that exists in QuickBooks.
No questions.
Okay. All right. For any reason that you do choose to void a check, okay, usually that's probably the only option that would be necessary. Again, if you void a transaction, that's a big no-no just because there's other ways around it. So for example, let's say your customer decides to cancel a transaction, right? You don't go in and void it and delete it because that's going to mess up your books. However, right, we talked about if a customer cancels on you, all right, what do? You simply go and edit the information, or in order to cancel it is you would use the credit memo system, all right? And instead of writing off the bad, and you would write it off as bad debt, or in this case, you just write it off as a cancelized item. But in this case, right, here, we're taking a look at how do you void either a check, a transaction, etc., right? It's pretty straightforward, especially if you write checks. Now, the rule of thumb here is you can also edit the check that you write. So definitely something that you want to take a look at. But if I go ahead and double click this, right, and let's say I didn't mean to write this check for somebody, or I wrote it for the wrong amount, you can simply go to the edit on the menu bar and you can void this check. Okay, pretty straightforward, right? Or let's go ahead and exit this. You could just simply right click on that transaction and you'd be able to void the check. Okay, now once you void that check, it will act as if this transaction has never happened. It will zero out your check, so then it undoes a lot of stuff. Now you especially do not want to do this, especially for bill payments, because if you void a bill payment, it's gonna undo that transaction. So it's gonna revert your bill, and it's going to reflect that you didn't pay for it. And therefore, once again, the more that you use the void idea, you will actually start mumble-jumbling your transaction. So you're better off editing the transaction than to void it. Okay? All right? Now, here it says that you can actually delete your transactions. Now, once again, once we actually reach the very end of a given period, right, what we do here in accounting is we like to close out our books. Now, what does it mean to close out our books is pretty straightforward, right? We decide to lock our information, and that's what close means, but because we've completed an accounting cycle, right? Other cases that you would use the closing date. Again, we'll talk about that in a couple sections later. Once again, we clean up by doing our proper standard procedures, such as run our business reports, right? We talked about the financial reports, which allows us to measure our profitability at a specific given place and time, okay? Now, of course, they do recommend that you don't delete anything for that reason. However, if you've finished and you wrapped up, right? You're wrapping up your your transactions, or your end of the accounting period transactions, making all of your adjustments. They do recommend you that, because the more information that you place into the transactions, right, the QuickBooks file can only hold so much details. Now, with that being said, right, if QuickBooks can hold up to 14,800 names in one sitting, okay, think about how many transactions you're going to overload your QuickBooks, and the bigger the file gets, the more difficult it takes, the more difficult it becomes, and it takes you longer to open up the program. And chances that if you do have this, right, oftentimes your program is more likely to crash, okay? So when we decide to delete our transactions, the only option that we have here is to actually delete the entire section. Okay, deleting recording. Okay, so memorize transactions. I went a little too far. Okay, so over here. So when we delete our transactions, right? There's one where you can actually delete all the transactions, but with this one, you get to keep all of your people and your list and your items. So once again, this is more for cleaning purposes only. Now, once you make a copy, so they usually recommend you, before deleting any transactions, right, or clearing your transactions, that's what it should be, you should back up your company file, which we will get to take a look at today. Okay, so let's go ahead and practice backing up our company file. They always recommend you to do that first before you consider going ahead and deleting all the transactions. So we're not going to delete the transactions because we need them for the future, but I'm going to show you what you can do. Okay, so it's going to be the same way. So how we delete our transaction is going to be by going up to the file menu bar. We're going to hit utilities, and it's going to be considered condensed data. So again, what this does is, after let's say you use the QuickBooks file for a year now, you're holding one whole entire year's worth of data. And that's probably recommended to you. Instead of holding on to those transactions, what happens is we should probably delete those transactions, because at that given point in time, you are already processing too much information, especially with new transactions that are existing for another year. So recommended, they should say, is like maybe every year. You can, essentially what you can do is you can create another company file. That is recommended. But why do that and have to enter every single person into the QuickBooks when you can simply do this right here? You could delete all the transactions as of 2018 and then continue on with the existing QuickBooks right now and proceed with 2019 transactions. So that's essentially what condensing the data does. And that's what it does, right? It allows you to continuously use the same exact QuickBooks. However, it allows you to enter information based on, like, for example, and then it allows you to also hold on to the information too. So if I go ahead and click condensed data, you're going to get this window. It's going to say, well, first off, before you go ahead and get started, did you actually back up your file? okay? In this case, we're assuming that we did. And then it's going to ask you, well, do you want to remove all the transactions that you select from your company? And in this case, you will. And then you'll click next. So once again, it's going to just ask you, oh, well, first, before anything, make sure you save a backup copy. And then what you're going to do is with that backup copy, it's going to hold all of your transactions for whatever year that you were proceeding it forth for. So in this case, I'm not going to because we need to use QuickBooks, right? But as you proceed, you're going to see that it's going to literally take your file. It's going to make a copy of it, place it on the desktop, and then it's going to delete every single transaction. But it will hold on to all of your lists, hold on to all of your people, all of your items, and all of your accounts. So then you don't have to create a new company file and have to re-upload all of that information. Okay, so once again, I'm going to click cancel because I still need to use this. I need to keep all my transactions right now. But yes, that's how you do it. And once again, in order for you to back up your company file, right? We've took a look at this before, but I'm not quite sure if we've actually done one. So rule of thumb is you should generally try to back up your company file pretty often. And we'll actually get to take a look at when we look at closing our company file. Okay, when we actually set a closing date. Okay, but here, once again, you're just going to go to the file at the top of the menu bar, and you have the choice to either back up the company. Back up the company. One more. Back up the company. And it's going to ask you, do you want a local backup or do you want to do this kind of backup? You always want to do a local backup. So if you do click on that, you will get this window that looks similar. And what it does is it just creates a copy of the working data file. And it has pretty much locks up all of your information, or it keeps track of the information for you. So this is another way of saying we're saving a copy of the file. Okay, so once again, I'll show you this later on when we close out our books. Okay, so I'm gonna go ahead and cancel. So that is going to be how you could delete all of your transactions, but still keep the information such as your lists, your items, as well as your accounts. Okay, so any questions for that? So once again, this is primarily used for when you are essentially trying to clean up your company data file. If you can use for QuickBooks for as long as your companies exist for. So once again, it's recommended, especially if you're using QuickBooks to hold all of your transactions. You want to be careful, like how long have you had it? When do you think should be a good perfect time to clear up your transactions? So a good kind of measure would be like every year, right? You don't want to hold all that information up to like 5 years of business transactions, even though QuickBooks allows you to hold up to that many. You want to definitely not want to build and keep building upon your company file. And instead of creating one for every single year, this one allows you to use one data file consistently throughout all of those years. And what you do is you use the condensed data to go ahead and reuse that same company file, right? Don't have to add anybody in there, and just build your transaction accordingly. Okay. Any questions there? No?
Nope.
Okay. Okay, so next section here is going to be talking about memorizing transaction. So the great thing about QuickBooks is it even makes it more easier to enter in a transaction. So for example, when you have a reoccurring transaction, so such as in this example here, we have a reoccurring Sinclair insurance. They bill you every single month. So what you can do is you can save time by memorizing a transaction. So then every time you see this bill appear, you can go ahead and create the bill, and instead of having to fill out all the information over and over again, it will fill the information for you. So let's go ahead and take a look at that. How do we do that? First things first is you need to create the bill first. So I'm going to go ahead and click enter a bill. And once again, I'm going to go ahead and enter in all the information that I want to see here. So here we go. Sinclair Insurance. All right, as you can see, okay, so we once again, that's going to be insurance expense, I believe. Okay. Yes, so we're going to be paying insurance expense $600 a month, every month. Okay. And once again, this is on January 15. Okay, and a memo is going to be monthly insurance payment. Okay, and once again, it doesn't say for which location that we're assigning this insurance for, so it could be for both. So let's go ahead and enter in this transaction. So once again, it happened on January 15. Okay. PO, is there a reference number? Once again, when you do, no reference number. So every time you do receive the bill, that's the only thing that you'll be entering in is the reference number. Memo again is monthly insurance payments. Okay. Again, the account is insurance expense. And it is for $600. Okay. And then memo is, once again, it's going to be maybe for the month of January. So I'm going to go ahead and write that in there. Monthly insurance expense for January. Okay. And then here, before you go ahead and click save and close, and you want to memorize this transaction, so then the next month that you receive it in February, it's going to fill the information in for you automatically. So at the very top of the window, you're going to have the option to memorize. And if I go ahead and click that, what's going to ask you is, well, how do you want to name this memorized transaction? I'm going to go ahead and name this as monthly insurance payments. Okay. And then you have the option. Do you want to add this to your reminders? Do you not want it to remind you? Do you want to automate the transaction? Yes, I want to automate this transaction entry. Meaning every time I open up this transaction, it will fill it in for me instead of remind me. Okay. And again, it says here, how often do you want it to remind you? I want it to remind me every month. Oh, oops. I want to do it monthly. All right. And again, it's going to ask you, well, when's the next due date? In this case, you need to toggle that the next due date is going to be February 15 of 2019. And how many months are going to be remaining? This is going to be, if January is your first month, then you're going to need it for the next 11 months. Okay. And then days in advance to enter it in. I'm going to leave it at 0. Okay. Because every bill has a due date. So in this case, if I were to just enter in this date here, that means every 15th of the month, it will alarm me saying, hey, you have insurance expense that you need to pay for. And in this case, I'm indicating that there should be 11 left. So you have one for February, March, April, May, June, July, August, September, October, November, and December. Okay. And I'm going to go ahead and click OK. So now it took a picture of this. So then I can go ahead and proceed to go ahead and click Save and Close. Now there are two ways that you can enter it in. Now, however, the most effective would be going through your memorized transaction list. However, if I was lazy and I just went ahead and just click on Enter a Bill, right, and I go ahead and type in Sinclair Insurance once again, what you're going to notice is that now it's recognizing that, okay, you're entering a bill from Sinclair Insurance. So it automatically filled in that, okay, so that means you must be paying insurance expense. Here you need to edit the date and et cetera, because it's not going to automatically pick it up. So once again, if you're entering a bill, it will not associate your memorized transaction. However, it does indicate that, say, hey, you must be paying insurance expense. Okay. So the best recommendation to go ahead, so I'm going to go, what does that say? You have not recorded this transaction. Do you want to record it now? No. So once again, the best way to do it is going up to your lists menu. Okay. One more over. List menu. And what you're going to do is you're going to look at memorized transactions. So here it is. If I go ahead and double click on it, it's going to pop up a bill with all the information, right? It is now February 15. I need to pay my insurance, okay, for the month for $600. And then, of course, you're going to edit, obviously, the bill number. You're going to also edit that this is now February. Okay, and I'm going to go ahead and click Save and Close. Okay, so for any reason that you need to delete a memorized transaction, you could just do it so forth, okay? Because this does not affect any transaction here because this just holds the information for you. So this one you could delete free willingly, okay? It doesn't affect any transaction, so you're okay to delete and modify anything. Now, if you do modify it, rule is that if you do edit it, you must re-click that memorized transaction for you to save your changes. Okay, so let's say, for example, I want to edit this, right? And in this case, right, it's going to tell me, well, how do you want to edit it? You want to do it like this? You want to, is this what you're trying to edit? No. In this case, that's what it says. If you case, let's say it's not every month and you want to change the date, maybe you could say, oh, I'm making 2 insurance and payments. Then you can go ahead and edit the information there, right? But once again, if that's not what you want to change, you want to actually change the form and say maybe the insurance expense went up, then you would actually have to go here and you would actually have to change it here manually, right? Let's say it's $650 now, okay? And what you have to do is you have to go back up to the top and click that memorize. And it says, okay, monthly insurance payment is already in this memorized transaction. Would you like to replace? In this case, you want to replace it. So that's how you can modify it, is that you actually have to change the bill form itself. If you do click on edit, it's just only going to change, I'm going to say no. So once again, if you want to change the formatting of the bill, you would actually have to double click it and it's going to pop up. So then if the next time you do this memorized transaction, it will allow you to save those changes, okay? But however, if you just are editing simple things, let's say to automatically fill in for you, or you want to change it from a monthly to every 2 weeks, or you want to change the date on it, then that's what you're going to have to fix here, all right? But once again, if you were trying to fix the bill itself, you would actually have to double click on it, modify it, and then click on memorize one more time. and then it's going to give you a message saying, well, this bill already exists. Would you like to replace it? And you want to click yes. So look, so the next time I click on this, now it's saying that my new insurance is now $650. Okay? And it's going based off the date. So now the next one is going to be March 15th. Okay? So once again, this makes it so much easier for you to once again enter in reoccurring bills. So bills that reflect the same amount every month, or once again, it's a reoccurring one, so this one is always going to be sent to you every single month for the same amount. So this makes it easier for you to enter in a transaction a lot more quicker too, if you already know that you have a bill coming up for. Okay, any questions there?
Nope.
Okay, so that was memorizing transaction. Let me go ahead and see what else we have left. Okay, closing period. Okay, so what I'm going to do is let's go ahead and stop here. And what we're going to do is we're going to take a break, and then when we come back, we'll finish up the rest of the chapter, okay? And this time, let's go ahead and take a nice 20-minute break.